Hello all of you. Now before we solve question number 6, first we will discuss about there is a concept called redemption of preference shares. So the blank pages which is given to you in your study material, you can see there at the starting of this buyback of shares, there we have already written about that buyback of shares out of profit, buyback out of fresh issue of shares, and what entry we pass in case of sale of investment, what entry we pass in case of bonus shares. Now I am discussing here about the concept called redemption of preference shares and the blank pages which is given there, okay, in your study material which is provided to you by BB Virtual. If you don't have enough pages there, you can write down your notebook as well. But at the end of this chapter, I will share this concept builder. I call it concept builder. All the concept that we have discussed, I have written at one place. So I will share the PDF of all this concept builder. You can find it out at the end of this chapter in the Google Drive link which is provided to you. There will be a folder there, concept builder. You can find it out there. Okay. Now first write it down here. Journal entries on journal entries write down there journal entries on redemption of preference shares. Journal entries on redemption of preference shares. Okay, write down there journal entries on redemption of preference shares. Okay, so one by one, okay, draw this for 12 to 15 lines, or not, I think 12 to 15, less than that, around 10 to 12 lines first draw if requires, and we can add some more line. Okay, so particulars, debit, and here credit. Now understand what is this redemption of preference share? The name of chapter is buyback of share. The name of chapter is buyback of share. What does it mean, redemption of preference share? Redemption of preference share, we are taking, when I say buyback of shares, we are talking about the purchase of equity share. When I say redemption of preference share, we are cancelling our preference share. What we are doing, we are cancelling our preference share. So what is the difference between buyback of equity shares and redemption of preference share? In case of buyback of equity share, first we purchase the equity shares from the market and then we cancel it. But what happened? We cancel it. But what happened in case of redemption of preference shares? In case of redemption of preference share, we don't purchase shares from the market. When we issue the preference shares in the market, when we issue the preference share, it is mentioned at that time only that we are going to redeem the share. We are going to cancel this share in the future. Now, when we do the redemption means we are cancelling our preference share. Just like in case of buyback of share, we are doing the cancellation of equity share. Here we are doing the cancellation of preference share. That's it. Same. We can do the buyback out of profit. We can do the buyback out of fresh issue of share. Same logic will apply here. We will do the redemption of preference shares out of profit. We can do the redemption out of fresh issue of shares. Same logic will apply here. But what happened? The slight different here, that there is no need to purchase the shares from the market. In case of buyback, first we purchase it. You can see here, first we purchase it. So equity share buyback account debit to bank, and then we cancel it. But in case of preference shares, just we cancel it, because when we issue the preference share, we inform to the preference shareholder that in future we are going to cancel this preference share. So we will cancel here preference share capital, but we will cancel it. But we are liable to pay to preference shareholder. Obviously, we are liable to pay to preference shareholder. Same logic will apply. It may be out of profit, it may be out of fresh issue of shares. If it is out of profit, then same rule we have to transfer to CRR account, capital redemption reserve account. So I will write it down one by one journal entry here and I will discuss with you. So first write down there first journal entry here, write down here first redemption of preference shares, redemption of preference shares, redemption of preference shares due, I'm writing in bracket, at par. So I'm cancelling the preference share at par. Understand it? When you cancel the share capital, increase in capital or decrease in capital? Decrease in capital, you're cancelling it. So decrease in capital debit. So we'll write it down. Preference share capital, preference share capital account debit, preference share capital account debit. Now we are liable to pay to preference shareholder. So we have cancelled the capital, but for that we are liable to pay to preference shareholder. If we are liable to pay, if you're liable to pay, it means it's a liability. Increase in liability credit. So I will credit to preference shareholder account. Preference share holder account. So what entry I have passed here? I have passed here preference share capital account debit, preference share capital account debit to preference shareholder account, because I am liable to pay. So you have cancelled the capital here and you are liable to pay to preference shareholder. But sometimes it may happen that we are doing the redemption, we are doing the cancellation, and we are paying some extra amount. Like we do the buyback on premium. We can do also here, we can do the redemption at premium. So here it may happen that in first entry only, the second option is redemption of preference shares, redemption of preference shares sorry due, I am writing in bracket here, at premium, at premium. Now we are decreasing the capital here. Now we are decreasing the capital, decrease in capital, debit. So we will write it down here, preference share capital, preference share capital account debit, preference share capital account debit. Okay. So which account will be debited here? Sorry, preference share capital account debit here. Okay, so preference share capital account debit. Now listen carefully. So we are liable to pay something. We are liable to pay something. The preference share capital account debit. We are liable to pay something. We will credit to preference shareholder. But we have decreased the capital. Decrease in capital debit. So that's why we are debited here preference share capital account. But we are paying something extra because we are doing the redemption at. We are doing redemption at premium. So the premium amount that we are paying, what we call it? In case of buyback, we call it premium on buyback. We'll call it premium on redemption here. So premium on redemption. Premium on redemption account debit. So preference share capital account, it will be recorded at face value. The premium amount, it will be debited at face value, and the premium amount will be debited to premium on redemption of preference share account debit, and we are liable to pay to equity shareholder. Sorry, not equity, to preference shareholder. So to preference shareholder account. To preference shareholder account. So it will mention in question whether we are doing buyback at par or at premium. If at par, so we will pass entry preference share capital account debit to preference shareholder account. If we are doing that redemption at premium, so entry will be preference share capital account debit, premium on redemption account debit to preference shareholder account. Okay. Now we have passed the entry for here due for buyback. Okay. Is two entry. Okay. Now second point here, second entry, payment to preference shareholder. Payment to preference shareholder. Now we'll pay to preference shareholder. Payment to preference shareholder. Okay. Here you have credited to preference shareholder account. Here you have credited to preference shareholder account because we are liable to pay to preference shareholder. Now we are paying to preference shareholder. Now we are paying to preference shareholder. So what entry will pass when you will pay to preference shareholder? We are discharging the liability. Decrease in liability will be debited. So entry will be preference shareholder account debit, preference share holder account debit, preference share holder account debit to bank account. So we are liable to pay. So we have debited preference share holder account debited to bank account. We are liable to, and now we are paying it. So decrease in liability. That's why preference shareholder account debit, decrease in liability to bank account. So to bank account. Second entry. Okay. So all of you have written this preference shareholder account debit to bank. Now We have paid to preference shareholder. Now third entry, write down there. If you have paid this premium on redemption of premium on buyback, here this premium on redemption. Now we have to write it up. Now very important discussion will come here. Now write down first adjustment of premium on redemption. Adjustment of premium on redemption of preference shares. Now very important discussion here. Very important discussion. Okay. Now, so here you have debited premium on redemption of preference shares account. Now we have to cancel it. We are writing it. So if you are writing it off, so we have debited here. Now we have debited here. Now we have to credit here. So when you will write it off, here you will write on credit side premium on redemption of preference shares, or you can say premium on redemption. So here you have debited and you have cancelled it. But against which reserve we are adjusting it? Against which reserve? So you can adjust against the surplus balance of profit and loss account. Profit and loss account you can adjust. The surplus balance you have balance in if you have general reserve, or you can call it revenue reserve if you have, or reserve. Okay, general reserve account, general reserve account, or very important point now, or here third here this securities premium account. Now write it down there, securities premium account. Very important. What happened here? When we write off premium on buyback of share, now understand here, difference between premium on buyback and premium on redemption of preference share. When we say that premium on buyback, you can see here that this premium on buyback, when we write it off premium buyback, you can adjust against securities premium, no problem. In fact, in all the questions that we have solved, generally I have adjusted this premium on buyback against the securities premium. Yes or no? Yes. So in all the questions that we have solved for the buyback of share here in this chapter, generally I have adjusted premium on buyback against securities premium. But here when you adjust premium on redemption, there is a difference. When I say premium on buyback, the extra amount that you have paid at the time of buyback of equity share. When I say premium on redemption, that the extra amount that we have paid at the time of cancellation of preference share capital. So here we are talking about the preference share capital. There we were talking about the equity share capital. So here when I say premium redemption of preference share, so here I have written securities premium in red color. Now what is this? First write a note there. Just give me a minute. One more entry will come here. Okay. Okay. Just listen first. So this securities premium that you have debited, write a note there. Okay. Write a note. Section, just first write, I will explain you. Section 133 does not allow, write down there, does not allow the utilization of securities premium account if accounting standard is followed. I am repeating it. Section 133 does not allow the utilization of securities premium account if accounting standard is followed. Just write it down first. Oh, okay. If accounting standard is followed. Now what happened here? Just give me. Okay. So here what happened? Under the Companies Act, there is a section 133 which says that if any company is following accounting standard, then they cannot utilize securities premium account to write off premium on redemption of preference shares. So generally it will not happen. 0.0001% actually is a possibility that any company don't follow accounting standard. Each and every company follow accounting standard, that we'll discuss when accounting standard will come. But each and every company follows accounting standard. Rarely it will happen that any company not follow accounting standard. So here, you can utilize securities premium if company is not following accounting standard. And it will not happen. Rare chances, very rare chances, remote possibility that any company is not following accounting standard. If you are not following, then you can utilize that securities premium account to write off premium on redemption of preference shares. And generally, almost 99.99% of the company will follow is, if company will follow accounting standard, then they cannot utilize the securities premium. If they are not following, then they can utilize securities premium. So what happens? Whenever the premium or redemption of preference share will come, I will not utilize the securities premium account, because 99.99% company follows accounting standard. If they follows accounting standard, as per the Companies Act, they cannot utilize securities premium. So generally they follow. So what happens? Premium on buyback I can utilize against securities premium account, and that's what we have done here in this question, here in this chapter. But when I say premium on redemption of preference share, in that case, we will avoid the securities premium. We will write it off against profit and loss account. We will write it against general reserve. Okay, remember this thing. Now come to fourth. Same rule apply. If you issue the shares in the market, you can. That is out of fresh issue of shares. But you can also do the redemption of preference shares. Same rule, out of profit. If we are doing out of profit, in that case, we have to transfer to CRR account. So write down here fourth entry, fourth point. Amount equal to nominal value, or you can say face value. Okay, nominal value, face value, same thing. Face value of preference shares redeemed transferred to CRR account. Same. Okay. Now one more thing. Here when we have pass entry, which reserve we have utilized here? You can utilize general reserve, you can utilize surplus balance of P&L, and generally when I transfer to CRR, I utilize only general reserve P&L. Lastly, if you don't have balance in general reserve, if you don't have balance in P&L, surplus balance or revenue reserve, other free reserve, then only you can utilize securities premium account. And lastly, instead generally don't utilize securities premium, then they transfer to CRR at the time of buyback of equity share. But in case of redemption of preference shares, you cannot utilize securities premium. So remember one thing, whenever point comes for security, whenever the redemption of preference share, never ever utilize securities premium account. Write it down here, amount equal to, don't utilize securities premium account for neither for this adjustment of premium and nor for to transfer to CRR account. So what entry we will pass here? We will pass entry here. General reserve account debit. General reserve account debit. General reserve account debit. Profit and loss account debit. Profit and loss account debit to CRR account. Profit and loss account debit to CRR account. So remember, don't utilize securities premium in case of this premium on redemption of preference share, and in case of CR, we will not utilize securities premium account. In case of buyback, you can utilize securities premium to write off premium on buyback, and we avoid in when we transfer to CRR in case of buyback. But here in redemption, don't utilize the securities premium for redemption of preference share or for transfer to CRR account. Okay, so this is about redemption of preference share. This is about redemption of preference share. So 4 entry will pass here. First, redemption of preference share due entry will decrease the capital. The preference share capital account debit to preference shareholder. If you are doing buyback at premium, so entry will be preference share capital account debit, premium on buyback account debit, and to equity share to preference shareholder account. Okay. Now we will pay to preference shareholder. So preference shareholder account debit to bank account. If we are redeeming at premium, so we will do the adjustment of redemption premium on redemption. So entry will be P&L account debit or general reserve account debit to premium on buyback. Then we have to transfer to CRR account. If we are doing out of profit, we will utilize general reserve or profit and loss account or any other free reserve to transfer to CRR account. So entry will be general reserve account debit, profit and loss account debit to CRR account. So this is about redemption of preference shares. Basically, the name of chapter is not redemption of preference share. The name of chapter is buyback of equity share. But in some question, they give the point related to redemption of preference share as well. That's why we are discussing here redemption of preference share. Now, one more concept that I want to discuss with you. Last concept here in this chapter. It is journal entries. Write down journal entries on cancellation of own debenture. On cancellation of own debenture. So journal entry for cancellation of own debenture. Now what is this? First write it down. I will explain it. Don't worry. So write down here 4-5 lines. Particulars, debit, credit. Okay. So first write down cancellation of own debenture. Cancellation of own debenture. Write down in bracket at profit. Cancellation of own debenture at profit. So entry will be, first write down entry I will discuss with you. Debenture account debit. Debenture account debit. Obviously, like share capital we write it down at face value. Similar debenture will also be recorded at face value. First write down entry I will explain you. So it will be recorded at face value only. Then 2, here credit investment in own debenture account. Investment in own debenture account. Okay, and 2 capital reserve account. First write down 2 capital reserve account. So capital reserve basically it represent profit. We'll explain you, just first write down, and it represent the cost. Okay, first write it down. Okay, done. Okay, so what happened here? The question will come. The question number 6 now will solve. There the point related to this concept of cancellation of own debenture will come, and then we'll discuss about this one. What is this cancellation of own debenture? Where we have some figures, and then we'll discuss about what is this cancellation of own debenture. We'll discuss about it. What is this cancellation of own debenture? Okay. So there are some figures in the question. Some figures will come. I will explain it there. Don't worry. Now come to question number 6. Now come to question number 6. Okay. I think similar question they have given in IC study material also, that I will give you today as homework. Okay, now come to question number 6 now. M Limited furnished the following summarized balance sheet as at 31st of March 2012. Equity rupees in thousand. Rupees in thousand. Okay, rupees in thousand. Now equity and liabilities, share capital authorized, issued and subscribed 5,000. It is authorized capital 5,000. Now issued and subscribed capital 3 lakh equity shares of rupees 10 each fully paid up, that 3,000, 20,000 9% preference share of rupees 100 each 2,000 issued 2 months back for the purpose of buyback. We'll discuss, this is an important point here. Then reserve and surplus, under reserve and surplus they have capital reserve 10, revenue reserve 4,000, then securities premium 500, profit and loss account 1,800, non-current liabilities 10% debenture 400, current liability and provision 40, asset side fixed asset cost 3,000, less provision for depreciation 250, 2750, non-current investment at cost 5,000, then current asset loans and advances including cash and bank balance 4,000. Now the company, now points given, now the company passed a resolution to buy back 20% of its equity share capital at rupees 15 per share. So they want to do the buyback. How much they want to do? They want to do buyback 20% of equity share capital. At what price they are doing buyback? They are doing rupees 50. The face value is 10. They are doing buyback at 15. It means they are paying rupees 5 as premium on buyback. For this purpose, it sold its investment of rupees 30 lakh for rupees 25 lakh. But first, this first point is related to buyback. This first point is related to buyback of shares. The second point, B point, the company redeemed the preference shares at a premium of 10%. The company redeemed the preference shares at a premium of 10% 1st April 2012. We'll discuss about it, but this is redemption of preference shares. Yes, the B point is related to redemption of preference shares. The third point, included in its investment were investment in own debenture costing rupees 3 lakh, face value rupees 3.3 lakh. So we'll discuss about it, that this point is related to cancellation of, C point is related to cancellation of own debenture. Cancellation of own debenture. The first point is related to buyback, second is related to redemption of preference share, and third is related to cancellation of own debenture. The point number D, the C and D basically related to cancellation of own debenture. Okay. Now point number D, these debentures were cancelled on 1st April 2012. Okay. You are required to pass necessary journal entries and prepare the balance sheet on 1st of April 2012. So we will pass journal entries one by one. No need to do the calculation of resource test, share outstanding test, debt equity ratio test, because it is not asked in the question that whether come into your calculation. So no need to do that calculation. You will just do the buyback. Now I will explain you one by one here journal entry for the buyback. Already know about it, that buyback, redemption of preference share, and then we'll discuss about in here in detail the cancellation of own debenture as well. So write down here question number. This is question number 6, page number 11. So write down question number 6, page number 11. Page number 11. So journal entries. Journal entries in the books of M Limited and rupees in 1000, and draw this for one page. Draw this for one page. It will take more than one page. I think in fact 1.5 page it will take, so many journal entries here. Okay. Write down there. Okay. Debit, credit. Okay. Debit, credit. Okay. 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 Write down this debit and credit. Okay. One by one. For your reference, I am writing here. First, we are passing journal entry for buyback of equity shares. Buyback of equity shares. Okay. So write down this. Okay. Buyback of equity shares. Give the heading there. We are passing all these journal entry on April 1st. Okay. One by one. So here at the time for buyback, first what we are doing here, we are issuing, we are selling the investment of rupees 30 lakh at rupees 25 lakh. So total value of investment which is given in balance sheet, the value of investment is 5,000. So don't get confused. They're talking about the out of 5,000, they're just talking about the 30. Out of 5,000, they're talking about only 30. An investment of rupees 30 lakh, we sell at rupees how much? 25. So how much is the profit? No, it is not a profit. Here there is a loss. Investment of rupees 30 lakh, we are selling at rupees 25. So there is a loss of rupees 5 lakh. Okay, write down there. Bank account debit. Bank account debit. Write down rupees in 1000 lakhs, that 25 lakhs. Rupees in 1000, 2500. So 2500 bank account debit. Profit and loss account debit. Profit and loss account debit. You can write it on bracket. Loss on sale of investment account. Loss on sale of investment account 500. So bank account debit bank account debit, profit and loss account debit to investment account. To investment account. How much it is? 3,000. So bank account debit 2,500, profit and loss account debit 500, and to investment account 3,000. Being investment sold for the purpose of buyback, for the purpose of buyback. So we sell the investment for the purpose of buyback. Okay, we raise the fund by sale of investment. Now, when we do the buyback, first we have to purchase the share. So when we purchase the share, equity share buyback account debit. So write down there, equity share buyback account debit. How many equity share? How many? We are doing the buyback of 20%. How much is the share capital here? You know, share capital is 3 lakh shares. So we are doing buyback. How much? 20%? Yes, 20%. 20% of 3 lakhs come 20,000 shares. So here, 20%, not 3 lakh 20%, 60,000 shares, not 20. So 60,000 shares. And for one share, we are paying rupees 15. So multiply by 15. How we have calculated this 60,000 shares? 3 lakh shares multiply by 20%. 3 lakh shares multiply by 20%. That's come 60,000 shares. So equity share buyback account debit 60,000 shares. So 60,000 shares multiply by 15. That's come 9 lakh. That's come 9 lakh. So equity share, we are paying 9 lakh on purchase of equity share. The equity share buyback account debit 9 lakh, but you have to write it on rupees in thousand. So you will write it like this. This is 900. 900,000 means 9 lakh. Okay. So we are paying it to bank account. 900. Being payment made for buyback. Being payment made for buyback. Okay, being payment made for buyback. Now we have purchased the shares. Now we have to cancel it. So we have to cancel it, decrease in capital. So decrease in capital debit. So equity share capital account debit. Equity share capital account debit 60,000 shares. And what is the face value share is 10. 10. So we are paying 15. That 5 is premium on buyback. So 60,000 multiplied by 10, that's come 6 lakh rupees in 1,600. Premium on buyback account debit 60,000 shares multiply by rupees 5, that's come 300. That's come 300. A premium on buyback. Now we have debited here equity share buyback account. Now we are cancelling it. We will credit it. We will credit here. So to equity share buyback account, how much it is? 900. To equity share buyback account, how much it is? 900. So being cancellation of equity share capital account, being cancellation of equity share capital on buyback. So first we have purchased it, then we have cancelled it. Now the premium on buyback is premium on buyback. The premium on buyback, that we can write it off against securities premium, no problem. Okay, but premium on redemption of preference share, that we don't write it off against securities premium account if company is for following years. And so generally company follows years, so we don't utilize premium on redemption of preference share against securities premium account. Remember this thing. Okay, now here buyback, no problem. So whether we have in securities premium 300 in question, if you see, so how much balance we have securities premium? We have balance of 500. So write down here Write down here. Securities premium account debit. Securities premium account debit 300 to premium on buyback, premium on buyback account. How much it is? 300. So here you have debited premium on buyback. Now you have credited that premium on buyback account get cancelled. So here equity share buyback account get cancelled, and here premium on buyback account get cancelled here. So write down here, being premium on buyback, adjusted against securities premium account, adjusted against securities premium account. Okay, now very important point. So we have passed the entry for purchase of equity share, then we have cancelled it, then we have adjusted a premium on buyback against the security premium account. Now you will tell me, sir, nothing is mentioned about the issue of shares in the market for the purpose of buyback. When you see this adjustment here, point number A, B, C, D, nothing is mentioned about that issue of shares in the market. Agree, nothing is mentioned about the issue of shares in the market. So some of you may think, so sir, we will say that the buyback of share is out of profit. You're correct. You may say that it is out of profit. If it is out of profit, then we have transferred to CRR account. Agree. But listen, here when you see in balance sheet, there the preference share which is appearing in balance sheet. You can see your balance sheet 20,009% preference share of rupees 100 each. So these share issued just 2 months back for the purpose of buyback. So we have issued share in the market 2 months back for the purpose of what? Buyback of shares. So we have issued preference shares in the market 2 months back for the purpose of buyback. For the purpose of buyback means what? If of buyback of what? Of equity shares. It means that we have already issued the shares in the market. Not given here. In adjustment it is not given. But in balance sheet it is appearing in the past 2 months back. We have issued the shares in the market for the purpose of buyback. It means that the entry we are passing that buyback of equity share is not out of profit. It is out of fresh issue of shares only. The difference here is that it is mentioned in balance sheet only. It means they have already accounted for issue of shares. Issue of shares they have already accounted. Okay. So we will write a note on it. For your reference I am writing here. Refer note 1. For reference I am writing refer note 1 here. Okay, so we will not pass entry. So we are not going to pass journal entry for transfer to CRR account. Why we are not going to pass transfer to CRR? So we will not pass journal entry for okay, for issue or for transfer to CRR account. No need to transfer to CRR account. Let me write it down here. We will not transfer to CRR account. Why we are not transferring to CRR account? I will write a note on it. But you know it why we are not transferring to CRR. Because we are doing here buyback out of fresh issue of shares. Now you say where it is not mentioned here, fresh issue of share. But when you see in balance sheet, here mentioned is that we are doing buyback. We have issued the preference share 2 months back for the purpose of what? Buyback. It means we have already issued the share in past for the purpose of buyback. Point number 1. Now point number 2 is that here you can see that we have cancelled the capital by 300 at the time of buyback. Agree. But don't get confused. Some students ask this doubt. That's why I'm saying that. But when you issue the shares in the market for the purpose of buyback, how many shares? That is 2000. So no problem in it. That we are cancelling equity share by 600 and we have issued the shares in the market. More than 600. No problem in it. So sometimes students ask this doubt, sir, here we are issuing the shares in the market 2000, but we have decreased the capital by 600. No problem in it. So here no need to transfer to CRR account in case of buyback of share, because for the purpose of buyback of share, 2 months back we have issued the equity share, we have issued preference shares in the market for the purpose of buyback. So these buyback of share, it is out of issue of shares only. It is out of issue of shares only. Okay. Now redemption of preference shares. Now come to point number B. Come to point number B. The company redeemed the preference shares at a premium of 10% on 1st of April 2012. Now they are doing the redemption of preference share. So for redemption of preference share, they are not issuing any shares in the market. They are not issuing any shares in the market. So redemption of preference shares is out of profit. But buyback of share is out of fresh issue of shares. How can I say that buyback of equity share is out of fresh issue of share? Because it is mentioned in question that they have 2 months back they issued the preference share in the market for the purpose of buyback. It means that buyback of share is out of fresh issue of shares, and nothing is mentioned about the redemption of preference share. It means it is not mentioned in question that they are issuing any shares in the market for the purpose of redemption of preference share. It means that redemption is out of profit. So in case of redemption of preference share, I will transfer the amount to CRR account. Remember this thing. In case of redemption of preference share, I will transfer the amount to CRR account, but not in the case of buyback of shares, because for buyback of share, it is mentioned in balance sheet that they have issued 2 months back some shares in the market for the purpose of what? Buyback. So that buyback of shares is out of fresh issue of shares, and redemption. Now they are also redeeming the preference shares here. So redemption of preference shares is out of profit. So we will pass the entry. Just we have discussed that for the redemption of preference shares. Okay. The pass journal entry for redemption of preference shares. We can give the heading there. Redemption of preference shares. Redemption of preference shares. Okay. So when we do the redemption of preference shares, first we cancel what? Capital. Decrease in capital, debit. So we are doing here, the company redeemed the preference share at a premium of 10%. So we'll pass the entry of premium also. So here, what is the face value of preference shares? 2000. We are redeeming at 10% premium. So decrease in capital. We have discussed about the general entry of redemption of preference share. You can see here that we are doing redemption at premium. So preference share capital account, it will be represented at face value, and here this is a premium amount. Okay. And to preference shareholder, the amount which we are liable to pay to preference shareholder. So preference share capital account will be debited by face value. So write down there, preference share capital account debit, and it is mentioned there that it is 9%. The name of preference share capital is 9%. So 9% preference share capital account debit, 9% preference share capital account debit, which is 2000. We are paying premium on redemption of preference shares. So premium on redemption of preference shares, premium on redemption of preference shares, account debit, 10% of 2000. We are paying premium 10%, so it will come 200, and we are liable to pay to preference shareholder. So to preference shareholder account, 2200, being redemption of preference shares due. Now we'll pay to preference shareholder. We have cancelled the share capital. Now we'll pay to preference shareholder. So entry will be preference shareholder account debit to bank account. Write down next entry. Preference shareholder account debit, preference shareholder account debit, we are liable to pay how much? 2200. So 2200 to bank account. Preference shareholder account debit to bank account. It's 2200. Now write down here, being payment to preference shareholder, payment to preference shareholder on redemption, being payment to preference shareholders on redemption. Okay, now after this, you can see here that there is a premium on redemption of preference shares. So one by one you can first premium on redemption of preference share. So here you have debited premium on redemption of preference share, and we will write it off, but we will not write it off against securities premium. As we have discussed today here, that when we do I'm come here at third entry, okay. So when we will not utilize securities premium account, we will make it simple, because as per the Companies Act, if the company is following accounting standard, they cannot utilize securities premium account, and generally company follow accounting standard. So we will not utilize securities premium account in case of premium or redemption of preference share. Okay, just to make it simple, remember, whenever you pass entry for redemption of preference share, don't utilize securities premium. Simple. Okay. So how much is the premium on redemption of preference share? Which is 200. So whether we have balance of 200, we will not utilize securities premium. Okay. So whether we have balance of 200, we have balance of 4000 in revenue reserve. So we will utilize revenue reserve. We have enough balance in it. So write down here, revenue reserve account debit, revenue reserve account debit, this 200 to premium on redemption of preference shares, premium on redemption of preference shares account, how much? 200. So here you have debited here premium on redemption of preference shares. Now you have cancelled it. Okay, 200. So write down narration, being premium on redemption of preference shares adjusted against securities premium account, adjusted against securities premium account. Okay, now very important point now, whether anything is mentioned in question that we are doing redemption of preference shares out of issue of shares? No, they have mentioned that we have issued the shares, but that is not for the purpose of redemption of preference share. That is for the purpose of buyback of share. Shares. So buyback of share, for your reference I am writing here, buyback of equity shares, is out of fresh issue of share. How can I say that it is out of fresh issue of shares? Because it is mentioned in question. You can say mentioned in balance sheet. I am writing it for your reference only. Okay. And what about the redemption of preference shares? So redemption of preference shares, this is out of profit. Why I am calling it out of profit? Because nothing is mentioned in the question that we are issuing shares in the market for the purpose of what? Redemption of preference share. It means it is out of profit. So therefore, transfer to CRR. So when we do buyback or redemption of preference share, we have to transfer to CRR account if this buyback or redemption is out of profit. So redemption of preference shares is out of profit. So we'll transfer to which account? CRR account. What is the face value of preference shares we have redeemed here? The face value is how much? 2000. So transfer to CRR account, and we have enough balance in revenue reserve. We have balance of 4,000. We have utilized 200. Still we have balance in it. So write down here revenue reserve account debit. Revenue reserve account debit, which is 2,000, to capital redemption reserve account. Capital redemption reserve account 2,000. This is a face value of redemption of preference shares. Okay, being face value of preference shares redeemed out of profit transferred to CRR account as per law. Okay, now we have passed the entry for redemption of preference share also. Now one more point, new point it is, that is cancellation of own debenture. Cancellation of own debenture. So I will discuss what is this cancellation of own debenture. Just give the heading there. Cancellation of own debentures. Cancellation of own debenture. Okay, cancellation of own debenture. Now understand this point. What is this cancellation of own debenture? Understand the logic here. It is mentioned in question that included in its investment, where investment in own debenture costing rupees 3 lakhs, face value is 3.30 lakhs. What happened here? You can see the investment of rupees 5,000. In that investment, they are talking only for the 3 lakhs, that is 300,000. They are talking about 300,000 here. So what happened here? Now concentrate here. Okay. Whenever I use any color other than blue color, that is for a reference. No need to write it in examination. I am writing for a reference. When you will do the revision, it will help you. Suppose this is a balance sheet. What is the name here? Whatever name. Okay. The name here is, okay, this is M Limited. Any company. This is the balance sheet of M Limited. So here in balance sheet is liability side and asset side. This is liability side, liabilities, and this is asset. This is liability side and this is asset. Do understand this point? What happened here? It is mentioned in question that there is an investment in own debenture. What does it mean? That you have issued the debenture in the market. Okay, the company issued debenture in the market, and out of that you have purchased some debenture, your own debenture you have purchased. So you have purchased your own debenture, you have purchased from the market. Okay, we have purchased our own debenture from the market. And what is the cost of I have purchased at rupees 3 lakhs? So I can say that I am talking only for the investment part. I am talking only for the investment. If you see in balance sheet, you can see there the investment that it is mentioned in question is 5,000. I am not talking about the 5,000. I am discussing here out of 5,000. I am talking only about the 300. I am talking about the 300. So why it is I have written it on asset side? Because I have purchased my own debenture. I am not talking about issue of debenture. I am discussing here I have purchased my own debenture. So at what price I have purchased? I have purchased at rupees 300 lakhs. Okay, 300 lakhs means 3 lakhs. It means 300,000. 3 lakhs, 300,000. So I purchase at 300,000. Okay. Now, what is this 300,000? Investment in own debenture. Investment in own debenture. Yeah, agree, sir. So from this 5,000, you are discussing only for this 300. Yes. But what happened? It is a cost. I have purchased at this price. I have purchased at rupees 300. But this is the same debenture that I have issued in the market, and from the market I have just purchased it. Okay. So what happened here? The total debenture which is mentioned in question, is how much? 400. 400. So here total debenture you have, total debenture is how much? Debenture is how much? 400. Total debenture is how much? 400. Now out of 400, I am saying that out of 400, I am saying that here's 330. I am discussing about 330 only. That the debenture that you have issued in the market out of 400, this says that how much is the face value that you have purchased? You have purchased at rupees 3 lakh. You have purchased at rupees 3 lakh. What is the face value of debenture? The face value of debenture is 3.3 lakh. So 3 lakh, you have purchased at rupees 3 lakh. That is the cost of the debenture that you have purchased from the market. But what is the face value of those debenture? Is 330. This is not 3, this is 3.30. 3.30 lakh, or you can say 330,000. So the face value I am discussing for the 330. This is the face value. So this is the face value of debenture that you have purchased from the market. This is face value. This is liability that you issue in the market debenture. And what is this? Here you can say that. So this 300, this 300 is the cost. What do you mean by cost here? So on liability side, you can see the debenture. I am not discussing about 400. Out of 400, I am talking about 330 only. Out of 5,000, I am discussing only about the 300 here. So here, the debenture of rupees 330 that you issue in the market, you are purchasing the same debenture at what price? You are purchasing at 300. You are purchasing at 300. Okay. Now, we are cancelling our own debenture that you have purchased. So here, what happens? We have to first cancel the debenture. How much is the debenture? What is the face value of debenture? Like capital, debenture is also recorded at face value. What is the value of debenture? The value of debenture is 330. So write down a decrease in debenture, decrease in liability, debit. So I will write it down here. 10, name of debenture is 10%. So 10% debentures account debit 330. Why we have debited? Decrease in liability. Why we have debited? Decrease in liability, debited. Now you have cancelled this investment. This investment is asset. So you have cancelled this investment to investment in own debenture account. This investment in own debenture account is a part of your investment in balance sheet. So for your reference, I am writing here investment. So investment in own debenture account, which is 300. So now we have cancelled the liability of rupees 330. We have cancelled the liability of rupees 330 against the asset of rupees 300. So we have cancelled the liability of 330 against the asset of rupees 300. Is it a profit or loss? It's a profit, because we have cancelled the liability by rupees 330 and we have cancelled the asset by rupees 300. So there is a profit of rupees 30. That profit we transfer to capital reserve account. So to capital reserve account, this is profit on cancellation of own debenture. Profit on cancellation of own debenture. How much it is? 30. So being own debentures, cancel. So understand this one. If you see, we have discussed today this entry here. You can see here that we have debited by face value. Yes. So here debenture account debit. Now investment, at what price you have purchased, you have credited, and the balance is profit that we have transferred to capital reserve account. But why we have transferred to capital reserve account? Because it is not a revenue profit, it's a capital profit. That's why we have transferred to capital reserve account. So this entry will pass. 10% debenture account debit to investment account to capital reserve. Debenture is debited because of decrease in liability. Decrease in liability debited. Decrease in liability will be debited. So this is decrease in liability. Decrease in liability. Now, why you have credited this investment account? Because we are cancelling it. Decrease in asset. Decrease in asset. So decrease in liability, decrease in asset. Okay. Now we have done with the journal entries. Now we have to prepare the balance sheet here. Now we have to prepare the balance sheet. Okay. Now write down. Okay. Write down one note. Write down one note here. Write down note that is related to that buyback of share, buyback of equity share is out of fresh issue of share, because it is mentioned in question. That's why we have not transferred to CRR account in case of buyback of equity shares. Write down there. In the given solution, in the given solution, buyback of equity shares, buyback of equity shares has been out of issue of preference shares as mentioned in balance sheet, as mentioned in balance sheet. Therefore, no amount is transferred to capital redemption reserve account for buyback of equity share, Okay. Now we have to prepare balance sheet now. Draw. Okay, I hope you have written this point. Okay, note 1. Now balance sheet. Write down there. Balance sheet of M Limited as on 1st of April 2012 and rupees in thousand. Now draw this a little bit more than half page. Okay. Okay, now draw this. Okay, write down their note amount. Equity and liabilities. First, shareholders fund. A point, share capital. B point, reserve and surplus. Then non-current liabilities. Long-term borrowing. Borrowings. Third point here. Current liabilities. Okay. Now total. Okay. Then assets. Non-current asset. Property, plant and equipment. Property, plant and equipment. Then intangibles. Then non-current investment. Okay. So then current asset. Okay. Current asset. Okay, non-current That's okay. Current asset. Okay. Now we'll prepare notes to account on share capital, reserve and surplus. We can also prepare long-term borrowing. No need to prepare on PP because PP a single amount is given. Investment, no need to prepare it. Current asset. Okay, no problem. Just give 3 notes to account. So one by one now. Notes to account number 1. Notes to accounts number 1. Share capital. Share capital. Notes to account number 1. Share capital. Okay. Notes to account number 1. Share capital. Okay. Now here write down rupees in thousand. All figures are in thousands. Okay. Rupees in thousands. So rupees in thousands. Okay. One by one. The share capital which is given in question is, how much is the share capital? First I am discussing about the equity share capital, which is 3,000. Total authorized given 5,000. You can write it down first. Authorized capital. Authorized capital 5,000. Now bifurcation is not given. How much is for equity? How much is for preference? Just write it down 5,000 there. Okay. Then issued, subscribed and fully paid up capital. Fully paid up capital. Fully paid up capital. Now understand this one. How much equity share capital we have? 3,000. So amount, I am saying amount. Type 3,000. In general entry, we have here at the time of buyback, we have debited equity share capital by rupees 600. So minus 600. How much is 2,400? So 2,400. But number, it is in thousand. Okay, it is in thousand. So how many number of shares is basically it is 2,40,000 shares. How I am saying 2,40,000 shares? You can see 3 lakh and we have done the buyback of 60,000. So how much shares? 2,40,000 shares. So write down here 2,40,000 equity shares. Equity shares of rupees 10 each. But rupees in thousand, so you will write it down here 2,400. Okay, 2,400. Write it down there 2,400. Okay. Now after this, preference share capital. So how much is given in balance sheet? Preference share capital. Preference share capital is given in question is how much preference share capital? 2,000. Okay, preference share capital. But we have redeemed the preference share capital. You can see here. Here we have debited to preference share capital account. Here we have debited to preference share capital account by 2,000. How much balance we have in preference share capital now? 0. So here do the total of these first notes to account, which is very simple. That is 2,400. 2,400. So write down this 2,400 in balance sheet. Share capital 2,400. Now next notes to account is reserve and surplus. So notes to account number 2. Notes to account number 2. Write down there reserve and surplus. Reserve and surplus. Reserve and surplus. Okay, so one by one. So notes to account number 2, reserve and surplus. The first is here. How much is capital reserve is how much? 10. So type 10 in your calci and you have credited here reserve, capital reserve. Capital you have credited by rupees 30. So 10 plus 30 how much? 40. So write down here. First capital reserve. Capital reserve which is given in question. 10 add profit on cancellation. Profit on cancellation of debentures. How much it is? 30. So in outer column it will come 40. It will come how much? 40. Next item now, revenue reserve. So write down here first revenue reserve. How much balance we have in revenue reserve? 4,000. 4,000 revenue reserve we have. But here if you see in journal entry, we have here We have here revenue reserve. Okay, just give me a minute. You have debited by rupees 200, so we'll deduct 200, and here you have debited by rupees 2000. So write down here less premium on that is premium on redemption of preference. Write down a premium on redemption of preference share. How much? 200. Then you have transferred to CRR also. So transferred to CRR, capital redemption reserve 2000. So how much balance you have in here in revenue reserve? 1800. 1800. Next item of reserve and surplus is securities premium 500. So write down there securities premium. The balance which is given there is 500 less premium on buyback. So we have adjusted premium on buyback against securities, that we can do against securities premium. So here you can see in journal entry, we have debited securities premium account by rupees 300. So deduct 300. Okay, so in outer column, so balance will come how much? 200. Okay. After securities premium, we have profit and loss account balance 1800. So profit and loss account, that is 1800. Okay, 1800. But when you see journal entry here, we have debited is a profit and loss account because we have sold the investment at loss. The profit will go down. We have debited. So we will deduct 500. So write down here less loss on sale of investment. How much it is? 500. So in outer column, it will come 1300. One more item will come here. Don't forget to write it down, which is capital redemption reserve. You can see we have transferred to CRR here 2000. So capital redemption reserve account, capital redemption reserve account. How much it is? 2000. Now you can do the total of reserve and surplus. It's 40 plus 1800, then 200, then 1300 and 2000 is 5340. So 5340. So write down this 5340. Okay. So here in reserve and surplus 5340. Okay. Now next. So non-current liability debenture is 400, but if you see journal entry here, if we see we'll make a notes to account on long-term borrowing. Okay, no problem. But here if you see, we have cancelled the debenture by 330. How much total debenture? 400. We have debited is by rupees how much? 330. The debenture is liability is credit balance. When you are debiting it, we are cancelling it by rupees 330. Okay. So write it down here. Notes to account number 3. Long-term borrowings. 10% debentures. 10% debentures. Given in balance sheet 400, we have cancelled 330. How much balance we have now? 70. So 70. How much balance we have here? 70. So write down this 70. Here. Now in balance sheet, long-term borrowing 70. Okay. Now after this here, you have current liability, no change in current liability, 40. It will come as it is 40. Write down here 40. Now come to asset side. How much property, plant and equipment you have? An outer column 2750. Okay. Fixed asset, to fixed asset we call PP. Okay. So write it down here. Property, plant and equipment. How much it is? 2750. There is no change in PP. 2750. Then you have non-current investment is 5,000, but what happened? Here you have sell some investment, na? So 5,000, you have credited by 3,000. So 5,000 investment is asset. When increase in asset, debit, decrease in asset, credit. You have credited here. It means there is a decrease in asset. So 5,000 is the amount of investment which is given in balance sheet. You have credited here. So minus 3,000, minus 3,000. How much balance you have? You have now 2,000. How much balance you have now? 2,000. Now here investment in own debenture is also a part of investment. So minus 300. So now you have balance 1,700. So write down here 1,700. Okay. Then current asset, in current asset given in question is how much? 4,000. So type 4,000 and remember one thing, 4,000, bank is part of current asset. Bank is a part of current asset, you have debited it. So there is an increase in asset, so plus 2,500. Then you have credited here by 900, so minus 900. Then here this premium redemption is this cancel. Okay. Now preference shareholder cancel. You have preference shareholder, you have credited here and then you have debited here. Okay. Now bank account credited, so minus 2,200. Now balance is 3,400. Now any other? No. Write it down. Current asset. How much current asset now? Is 3,400. Now we can do the total of balance sheet. 2,400 plus 5,350 plus 70 plus 40 is 7,850. 7,850. 2,750 plus 1,700 plus 3,400, that is 7,850. 7,850. Okay, done. Now only two questions for today. Okay, so today in class we have solved question number 5th and 6th. Most probably the chapter will be finished tomorrow. Question number 7, 8 and 9 I will solve tomorrow, and most probably next session will be the next, I think day 5th will be the last day for this buyback option. Now what the today's homework? Now I'm writing here for today's homework. Write down here today's homework. Okay, so today's homework is, now come to practice question. Question number 1 done. Now question number 1, yes, done. Question number 2, now this is redemption of it. You can do it. Now question number 2 is homework for today. So practice question number 2. Practice question number 2 is homework. 3, I think we have already covered this question number 3. Yes, 3. Now question number 4 is also homework. For today, question number 3 and question number 4 is homework. You can see the same point here. You can see that issue 2 months back for the purpose of buyback. This is similar to question number that we have solved today in class. Question number I think yes, question number 6 is similar to question number class 6. So here, so question this is question number 4, practice question number 4 and practice question number 4. This is homework for today. And please you have to do homework after the end of the chapter. After the end of the chapter, I will give you the LMM. What is the LMM? Last minute mastery. What is this last minute mastery? Last minute mastery means when you will do the revision. When you will do the revision, you don't need to do all the question at the time of revision. Initially, when I solve, I give the homework also. For your practice, I give the homework. But when you will do the revision, don't waste your time. You have 6 papers. You have total 6 papers. So don't waste your time to do all the question at the time of revision. I will give selected question. So at the time of revision, you just have to solve only those selected questions that I will give you at the end of every chapter. Okay. So, but for first time, you have to solve all the practice question. Okay. For the practice, but I will give you the important question, or we call it LMM, last minute mastery question. That question you have to solve at the time of revision after the regular class. Okay. That is for today. Now we will meet tomorrow. Take care all of you. Bye bye.